Welcome to the Sharad Kohli show. I was the first person about a month and a half back to say that gold will ultimately break the shackles of the factors which have been overriding. Gold prices have been under pressure ever since the war between Iran and US and Israel started. What were those factors? Crude oil prices, which led to higher demand of dollar. This led to dollar index being high and the bond yields in America, which were persistently on a rise. Now, these were the factors which were dominating and keeping the gold prices low, because in the COMEX in New York, there is a lobby. When these factors they rise, they tend to build the short contracts. That is, short selling happens, which keeps the gold prices under pressure. What did I say a month and a half back? That gold will ultimately break these shackles. And there are already indications coming of gold and silver for that matter. Silver is pretty much shadowing gold at this point of time. So I'm not naming silver again and again separately. So there are signs that gold is breaking those shackles, or at least trying to break, because last night the gold prices, they touched $4470 per ounce. In Indian rupees, about 1,55,000 rupees plus per 10 grams. Now, why did I say that? And what are the factors rising? Let me give you some perspective before that, which is very important to understand. How much gold is traded around the world on an everyday basis? Probably you wouldn't have thought about that. Would you believe if I say that about $360 to $370 billion of gold is traded across the world? This includes the gold traded in the commodity markets through paper trading, which is contract trading. It also includes over-the-counter, which is OTC, over-the-counter sales, which means spot gold, which in turn means trading gold in hard form. So combined, both of them, $360 to $370 billion of gold. And for my Indian viewers, if I convert that into rupees at the current dollar price, rupees 35 lakh crores of gold which is traded across the world every day. Well, that's the kind of volume which the world deals in as far as the gold is concerned. I'll give you some more interesting data, because I spoke of dollar index. It's important for you to know that what is dollar index comprised of. But I'll come to that later. If not in this video, if the video gets longer, I'll probably postpone this discussion to another video. But what is more important is to understand the current perspective as of now. So what made gold break those shackles for that matter? Take the geopolitical scenario for a moment. The stalemate between Iran and the US continues, very much continues. In fact, now President Trump is thinking of converting this into an economic war instead of a kinetic war. Leave Iran in the state it is in. 1 million to 1.5 million real is for a dollar. Well, the currency has almost collapsed if we compare it to a dollar. Inflation in Iran is rampant, about 60 to 70% inflation, they say. Essentials are getting beyond reach as far as the Iranians are concerned. There are no jobs. Food shortages being seen in various parts of Iran, although we are not perfectly getting media reports, or shall I say accurate media reports from Iran for war reasons or for various reasons. But then that is set to be the condition in Iran. So President Trump wants to exploit this situation and leave Iranians in that state for a longer time so that they come under pressure and they succumb to this pressure. In the meanwhile, Iran has demanded damages from US, about 300 billion, for the loss or for the damages caused within its territory because of American attacks. Now, President Trump, to counter that damage claim, has put a counter claim. He says Iran must compensate US for the damages which Iran has done to its own people, for the protesters which were protesting in Iran, and for the damages done in its military bases in Jordan, in Bahrain, in Kuwait, in UAE, Saudi Arabia earlier. US wants compensation from Iran as well. So that's a counterclaim which he's made to cancel out what Iran has been saying or insisting on. So that is the status as of now. The tensions between Saudi Arabians and Yemen-based Houthis continues. There are news of occasional attacks. There are news pieces coming for a missile being fired or a drone being fired or a tanker being attacked. That continues. Now let's come back to gold. Now, if gold has defied crude oil prices, which rose to 88, why I said defied? Because crude prices rose to 88. Dollar index went closer to 100. Bond yields went back to 4.7. Now, in a normal circumstance, over the last few months, if these three factors were up, obviously the gold prices were under pressure. For the people who are following the prices, I hope you remember the situation. It was continuously under pressure. But here was a time when gold actually rose while all these three parameters, they were on the up. Gold also started going up. Well, the anticipation of Fed not increasing the rate did probably go in favor. On Wednesday, we're going to get inflation numbers from the US. If the inflation falls down, yes, gold may again see a surge, because then there'll be no chances of Fed increasing the rate. But then these were secondary factors. Let's look at the primary factors which made gold defy this parameter trend of crude dollar index bond yield. The first factor was geopolitical uncertainty. It is now being felt by a lobby of traders that geopolitical risks are increasing. So safe haven requirement of gold is on the rise. Instability in the world economy. It is now being felt that the world economy is getting more and more unstable, is more debt driven now than ever. They say there's a time bomb of debt which is ticking away as far as the world is concerned. Then there was a China factor. During January to June, China bought 865 tons of gold, it is said. 89% more than the same period over last year. Accumulation of gold by China, of course, it leads to increase in demand. But then China has a futuristic view of where the gold is going to be in the years to come, and not too distant future, by the way. So all these factors combined, and of course it is now being expected that the inflation numbers which are going to be announced tomorrow may not after all be as bad. And of course President Trump is making his best attempt to keep the inflation low, because he's heading for November midterm, where in Michigan, El Said, the progressive candidate, has won, which is backed by Dems. So this scenario was overriding, and it went on top of crude oil, dollar index, bond yields, and we saw what happened last night. Gold defied these and went up to 4470. Of course, as we speak now, it's afternoon of 11th of August. There was some profit booking. It's now around 4370 or so. But that's normal after a sudden surge. Profit booking does come. I won't say that gold has broken the shackles completely of higher crude oil prices, higher bond yields, higher dollar index. I won't say it is completely broken, but there are indications now, and a very clear one too, that gold is trying to get away from these factors. They were sort of binding gold until now. The gold wants to get out of this. Silver, I'm not speaking separately, because as I said, silver is pretty much shadowing gold. So I'm not saying anything because there's nothing which is at this point of time which is separately driving silver for now. I hope you like the contents of this particular video. I'll come out with the dollar index and some other interesting information about gold in the videos to come. Of course, I'll be talking about the world economy, stock markets, taxation, your personal finance, also with the flux of time. Please do subscribe to the channel. The channel is pretty new, started on August 1st. Some videos were posted in July, but those were on test basis. So your support in subscribing, commenting, letting me know what else do you want to listen to will definitely help me in bringing you more interesting information. But please do press the subscribe button, the bell icon. As I look forward to connecting with you again tomorrow with another video, another useful information. Thank you.